board, Seth R. Freeman is the Senior Managing Director of Glass Ranter Advisory and Capital Group LLC, who's now joining us. Hi, thank you so much, Mr. Freeman, for taking the time out and joining us. Mr. Freeman, big news coming in as far as Wall Street is concerned. We could perhaps expect a September rate cut. But, the way things are moving, the way markets reacted, do you think that was a bit of an overreaction? We did have, analysts come on board and speak to us about, the entire thing that transpired at Jackson Hole. And, some of the analysts were quite divided about the fact that it was a bit of an overreaction because the market is not really pricing in perhaps the inflation that might ensue as a result of tariffs, because historically tariffs have caused, the prices to pass down to the consumers. So that's something that the market is not pricing in. And the shift for Fed has also shifted to the labor market instead of inflation now.
Mm-hmm. Yeah, it's very interesting. But as I mentioned, I think in the last time we were together, the Fed would be looking at the labor market as much as inflation. And we're still experiencing kind of this time gap between the imposition of tariffs and their effect on real pricing. I did want to point out, though, my wife wanted me to point out that these beautiful marigolds, which I know are important in India, were grown in her garden.
All right, hi, Mr. Freeman. This is Kanishka also joining in. Just like Ankita was talking about the markets and how they probably overreacted when it came to, Powell's comments. But do you expect this kind of rally that we saw last week to sustain going forward in the coming week or, in the month of September at least, before we see that Fed rate cut happening?
Generally I'm kind of, negative muted, but I actually do expect a little rally or at least, some modest continued increases as we get past the Labor Day weekend.
Right. So, Mr. Freeman, does the rate cut that go on in September, what would be the dot plot for Fed, and what would be the path for rate cut going ahead? Because that's also something that everybody is watching out for. Now, September rate cut perhaps on the annual at 25 bips is what we are pricing in. But going ahead, there might be a pause on the rate cuts because then they would be assessing the inflation. And we did manage to figure that out from the commentary that post-September, there could perhaps be a pause.
Yeah, I would actually expect a pause because the level of imported goods that were front run in anticipation of the tariffs are beginning to wear down. And that's when prices are really going to become, apparent to end users. And that's going to put pressure on our economy.
Okay. And Mr. Freeman, like you said, you are quite positive on the markets as of now, and we could see a rally coming in. The last leg of rally that we saw in the US markets, that was driven by tech majorly. Now Dow is also, at all-time highs, but largely it was driven by the tech stocks in S&P 500 and NASDAQ. So do you expect this sectoral trend to continue, or is there any other sector that we, can expect to lead the next leg of rally for US markets?
Yeah, it's a very good point that actually a small number of stocks are driving the gains. But I do think we're going to see a broader range. There really are, I think, real announcements of U.S. core companies, manufacturing companies, at least announcing plans to increase their investments here domestically. And the market is, future oriented. So that may help a little bit. I think it also has to do with, global sourcing issues in terms of, is policy going to change in regard to tariffs on electronic goods imported to the United States, meaning Apple and these kinds of targeted companies.
Mr. Freeman, once the interest rate comes through, what does it mean for the emerging markets, especially India? Because once the interest rate comes through, the bond yields cool off, the dollar index comes down. It's a big positive for all the emerging markets. They begin to look more attractive. Where does India stand in the larger picture then, given the kind of trade war that we are stuck with the US? Where does India stand in the larger scheme of things?
Yeah, well, India will be a beneficiary, and there are investors that make focused investments in different emerging markets companies, but also there's a tremendous amount of money invested in emerging markets index funds. And so India will gain by its proportional allocation in those index funds. But I think this is generally, frankly, positive for emerging markets broadly and India ultimately in particular.
All right, thank you, Mr. Freeman, for taking us through all those Q and helping us
Thank you.
understand, the macro setup and also what what to look at when it comes to India. But